Hi, this is Justin DeAngelis. I'm a partner at Denham Capital, and I co-head our sustainable infrastructure efforts at Denham. Denham is a global sustainable infrastructure, energy resources, and mining investment firm. We have about $12 billion of capital we've raised over the years, and up until a year ago, it's all been focused on equity. But last year, we started a sustainable infrastructure credit business with a commitment of $2 billion from AFLAC. One of the questions people ask me is with the economy and the markets being hit negatively recently and what the future looks like, could sustainability and ESG take a back seat to just seeking returns? That question, I think, actually is a false choice. For the past 15 years, we've been investing in renewable power, and it's been more fundamental in nature, meaning our investments have always focused on the economics of our transactions that have a positive social impact. And I think that the markets today actually, for the most part, particularly in the infrastructure space, have evolved to that. Returns don't take a backseat. They're a primary focus for all investors. And the question really then becomes, are you taking ESG into consideration, and are you making sustainable investments? The world's evolved certainly over the past 10 to 15 years in that case. 15 years ago, when we were investing in renewable power, people had a lot of questions about the economic sustainability of those investments. And as everyone has seen over the past 15 years, renewables now have become a primary focal point for infrastructure investing, and there's billions and trillions of capital looking to invest in that area. But as we look forward, there's $24 trillion of investment forecast in renewables through 2050, actually almost 10 trillion by the end of this decade. There is an increasing question about, like, really, is there any more? Is there any more investing in infrastructure more broadly? Can renewable power in and of itself power the all electric grids and convert fossil fuel industry to really a net zero position? The answer is going to evolve really over the next couple of decades, frankly, but the real answer is no. You are going to need other investments, particularly in the power space, to support what is primarily intermittent renewable power to really make that conversion of the fossil fuel industry to really get to a net zero position. In the near term, a lot of that is going to be in the battery energy storage space to help firm up what is intermittent renewables. The lights always have to stay on, so how do you do that? Historically, the choice has been with natural gas or liquid fire generation. In the near term, that is being replaced with battery energy storage, but that still can't solve all the problems today because storage is just that storage. It's not actually generation, and it can only discharge today economically for 1 to 4 hours. So there is a need for other sustainable infrastructure investments to support power generation, renewable power generation as it moves forward. But as you look beyond just renewable power, there are other areas of investment opportunity that I don't think will be as materially impacted by economic headwinds that everybody sees in front of us to some degree. So you look at electric vehicles, there's a $500 billion forecast to be invested through the end of this decade in electric vehicles in and of themselves by all the auto manufacturers globally. We're going to move from 16 million electric vehicles to a forecast 350 million electric vehicles over the next couple decades. That's a lot of electric vehicles, and those all need to be charged. So how are you going to charge those electric vehicles? Well, electric vehicle charging infrastructure is another area of focus for broader sustainable infrastructure that will have certainly some headwinds with economic downturn, but this isn't a fleeting moment. It's not like it was 3 or 4 years ago. Electric vehicles in and of themselves have increased almost 5x since 2018. So you can see the curve is moving up, even if all the forecasts are partially off. So I don't really see a material impact in what I'll call the more mainstream sustainable infrastructure from economic headwinds, because today, renewable power, adjacent industries, for the most part, are economic. 2/3 of the world is powered by, or could be economically powered by renewable power. It does need to be firmed up, as I noted. And I don't see the amount of capital that's moved into the space over the past 10 years of a public bull market really being directly related to that bull market. Indirectly, maybe so, because there is more capital formation, and that capital will continue to move into the space because you are both making a positive environmental or social impact, but you are also getting good returns. And I think that many investors today understand that, and hopefully there's more in the future as well. As I think about the next 5 years and what is sustainable investing, today there's a lot of hand waving around energy transition, ESG, sustainability. A lot of people use those words interchangeably. I think in the near term, what you're going to have is a bit of a shakeout where sustainability in particular will have to have some more definition. You see that already happening in the EU with the EU taxonomy, where they're trying to define what sustainability means. You see it coming in the US, where the SEC is looking to promulgate rules about greenwashing. So I think in the next 5 years, actually in the next 3 years, 2 to 3 years, that definition of what is sustainable will become more succinct. It's something that we have tried to get ahead of ourselves. And then I actually think over the next 5 to 10 years, we're going to drop that adjective. You will no longer need to say you're making sustainable infrastructure investments, because all investments will have to meet that standard. You won't have to ask somebody, is this sustainable? Because it'll be by default what people are focused on. So if I'm an investor, or if I'm if I'm Denham, or my competitors looking around, I think the focus right now should be on really making sure you know what you're getting for your investment, whether as an LP, as a GP, providing definition to really what sustainability means at the end of the day. And that can be as wide or as narrow as you like. We have our own standards here at Denham. And then at least you know that if you're making an investment and you call it ESG, or you call it sustainable, or you call it net zero, that has real teeth to it, as opposed to a lot of bandied about adjectives that I see today.